There's a lot of dovish Fed speak out right now. With that in mind, what's your WEX word of the day?
So my WEX word of the day is a little bit of the opposite of that. It's tail risk. And
Really?
the reason I say that is, look, yes, obviously the geopolitical events in the last few days have really changed the tail possibilities that are in the market. But what I find very interesting is you're not seeing it reflected in volatility at all, Frank. When we first saw Russia-Ukraine happen, you actually saw VIX spike to 35. We actually haven't seen anything of the sort so far, and VIX has stayed subdued and below 20.
Amy Wu being a bit of a contrarian this morning. All right. So I do want to talk to you about some action in the market we've seen. We've seen small caps really rally over the last couple of days. As a matter of fact, over the last week, they're the best performer out of all the indices. What do you make of that? Is that simply just the easing of the bond yield pressure?
Look, I think that has a lot to do with it. I do think growth versus value, small cap versus large cap, these kind of trades are ones that investors have been hoping works for a long time. It's something our own strategist has called for from a valuation perspective. I think it's a little bit too early to tell right now. We've seen these kind of go ahead and then lose momentum. So we'll have to see if that continues now. And I do think when you look at it, it's also just a question at this point of valuation.
All right. So, this time during the day, we really like to focus on moves looking ahead. So with the idea that bond yields are easing right now, what picks are you looking at right now that you think are more investable in light of lower bond yields?
Yeah, you know what's interesting is conversations we've had with clients since last week into today, which just this question of, have we really seen a bottom in these rate sensitive sectors? You saw these massive sell-offs last week in your TLT, in your utilities, in a lot of consumer areas that would be hit hard as rates go higher. And so the question of, and frankly, the geopolitics bakes into this, right? Because some questions of whether or not the rate easing will happen more because of these geopolitical risks, I do think people are starting to ask, look, have we seen a bottom? And if that is the case, are those same rate sensitive sectors I mentioned before the ones that we can finally have some upside in? And people are starting to look at that.
Yeah, both the TLT making a big move upside in the pre-market, utilities just fractionally higher. Got to ask you about the mega cap names, the Magnificent Seven, NVIDIA, Alphabet, et cetera. Right now, what's your view on them?
So look, these are names where when you look at option sentiment, more or less, it's been pretty sanguine. I would say Apple is the one outlier where I do think the risk coming out of China has increased put skew, so increased that demand for downside hedges in the name. But on an overall basis, volatility isn't screaming high. You're not seeing warning signs. And a lot of what we've talked to people about is it's just math. So that concentration of names in that Magnificent Seven is what will hold the line in your NASDAQ and your S&P. So if those are still okay, it's very hard to see how you can have a very brutal sell-off in the market.